everybody, this is Lara at pureelliottwave.com on the 28th of October with a short analysis of SHIBA for you. It's short because there's not a lot of data for this one. I've been asked to do this and I saw someone else's analysis of SHIBA where they had an incomplete, out of context Elliott wave count which identified a triangle here, and they were trying to explain that it could be a second wave, but they had only labelled the triangle, they hadn't labelled the impulse, and here's the second wave. The triangle, folks, is pretty obviously in a fourth wave position, so that meets Elliott wave rules. You don't need to rewrite the rules if you pay attention to the larger context at the same time as paying attention to detail. I'm going to start my wave count from the low here. And this data prior to the low looks so light. Volume is probably very thin here and probably not enough for an Elliott wave count. It's probably not really enough for an Elliott wave count in here. I can't tell you how much data or how much volume you need for reasonable looking Elliott wave structures, but it is quite substantial. So this Elliott wave analysis comes with that caveat. Early on in SHIBA's price history, it probably doesn't have sufficient volume for any reasonable Elliott wave analysis to be done on it. But I'm going to have a go from this low. From this low on up, we could have a 5-wave impulse complete here, or the final 5th wave could move a little bit higher. And I'm going to use an Elliott wave rule along with the channel to provide confidence points to tell us when we may have had a trend change. Here, from here to here, I can see a really pretty good looking 5-wave impulse. 1, 2, 3, 4, 5. I'm labelling this minor wave 1, minor wave 2, maybe a zigzag, minor wave 3, quite a strong 3rd wave up. Minor wave 4 fits perfectly as a regular contracting triangle, meeting all Elliott wave rules. And minor wave 5 may be extending. Minor wave 1 is not extended. Minor 3 is extended. Only 2 of the 3 actionary waves within an impulse may extend, and so the 5th wave may also extend. I'm going to label it 1, 2, 3, 4, 5. I'm going to label it incomplete because I calculated this carefully. This is not a dark cloud cover. This candlestick has not closed within half of the length of this candlestick, so there's no bearish candlestick reversal pattern. When we get to the next chart, I'll show you why that's important. So I'm going to assume the trend remains the same until proven otherwise. I'm going to assume for SHIBA the upward trend remains intact for now, but when we get to the next chart we'll see why it could also be over here. I'm then going to draw an Elliott channel around this movement using Elliott's first technique, with the first trend line from the end of wave 1 to the end of wave 3, and then a parallel copy on the end of wave 2, and it almost perfectly shows where wave 4 was contained. So even though this has a pretty strong slope, which means it doesn't have great technical significance, and that does reduce its technical significance from an Elliott wave perspective, this is a really good looking trend channel. Gives us another little bit of confidence that this impulse upward is probably correctly labelled in Elliott wave terms. And so when this trend channel is breached very clearly by downward movement, not sideways and not just an overshoot, I define a breach as at least a full daily candlestick below and not touching this lower edge of the trend line. If we see that, then we can have some confidence that the 5-wave up structure that I'm labelling intermediate 1 should then be complete, and intermediate 2 should then be underway. Within minor wave 5, 1, 2, 3, 4, 5 minute degree waves, minute wave 4 may not move into minute wave 1 price territory. Now if we have the triangle labelled correctly here, we could label minute 1 over at this candlestick, but I think the most obvious place and the best looking place for it to be over would be this candlestick, and this high is 0.000044. If we see a new low below that point, then it cannot be a continuation of this little 4th wave, because minute wave 4 may not move into minute wave 1 price territory. And the nice thing about that is Elliott wave rules are absolute, and so if you get a new low by any amount at any time frame below this price point, then you should be labelling minor wave 5, and so intermediate wave 1 over at this high, and then intermediate wave 2 downward would then be expected to be underway. When we have a new price point below this, or probably a trend channel breach before that, if we get the trend channel breach and it looks clear and strong before this price point is passed, then I'd have confidence. Either one, whichever one happens, then I would draw a Fibonacci ratio along the length of intermediate wave 1, and I would look for intermediate 2 to probably reach at least to the 0.618 Fibonacci ratio of intermediate wave 1, and probably a bit deeper than that. I could have put it on here, but the invalidation point is right down at the start of this wave count at this low here, which I think is the 5th of September. Okay, let's take a look at some classic technical analysis, which I have more confidence in for this market because of the very early nature of this data and probably not enough volume for good-looking Elliott wave structures, although we did just see a pretty good-looking impulse with the first, second, third and fourth wave there. At this stage, there's not enough price history for this market to have confidence in how extreme its upward trends can get. Here, ADX reaches very extreme, it's above both DX lines and above 40, and here it's nearing, well, it's above 65. I have seen cryptocurrencies where ADX can get above 70. I don't know, can't remember that I've seen anywhere ADX can get above 80, but above 65, it's entering territory where I would be expecting an upcoming decent trend change and quite a strong pullback or a short-term bear market. RSI is also very extreme here. There's a little bit of bearish divergence here, but it's only single and it's quite weak. So these two are now looking very extreme, but not as extreme as these markets can exhibit with RSI and ADX. So I think that a high is going to be in place sooner rather than later, but I don't have confidence that it's at this high on this day yet. And the reason why I don't have confidence is there is no bearish candlestick pattern. I calculated the length of this real body, and the closing point of this real body is less than half the length of this real body. For a dark cloud cover, which is what this could be, you need to see a close at least halfway through the prior green real body, and that's not the case. Volume is supporting upward movement. That's normal to see for these markets. Price and volume usually exhibit this curve when it sees growth in an exponential pattern. ATR showing an increase. There's a lot of support for this upward movement. This is a market that, again, like pretty much every other cryptocurrency I've ever looked at, has the potential to exhibit exponential growth, which means it has the potential to form huge bubbles, and then it'll crash, and then it could form a new bigger bubble. We've been over ADX. On balance volume has a nice triangle pattern along with price having a nice triangle pattern. The breakout here occurred at the same day that price broke out of the price triangle pattern, so that bullish signal from on balance volume was solid confirmation of a breakout from this triangle pattern several days ago. The target from the triangle, calculated from the widest part, the base of the triangle, and added to the breakout point was this 0.000042, and that's already been well past, it's been exceeded. That's a little bit of an indication we may have a high here, but my bottom line is I want to see a bearish candlestick pattern, or that would be the first thing I'd be looking for, and then I want to see a breach of this trend channel. If the breach is really strong, I'd have some reasonable confidence intermediate 2 is then underway. Okay, that's all for me with a new analysis of a new market for you today, and I did this because someone asked me, and I did it because I just wanted to show you an Elliott wave count for this market, done in context with attention to detail. I hope everyone's enjoyed this, and thank you so much for your support from all the subscribers of the YouTube channel. And just a reminder, on Monday I'm publishing my book and my Learn Pure Elliott Wave course. If you want to get a special publication offer and get $200 off the course, and you want to be notified when we publish that, go on over to pureelliottwave.com, and from the home page you can give us your email address, and if you give us your email address, I'll email you on the launch date, and then after that I'll delete all those emails because I hate spam. Thank you.